Welcome back to the MBP channel. Today we'll discuss Amazon's history, business model, competition, and challenges. Amazon started as a small online bookstore operating out of a garage, driven by a vision to be the world's largest online bookstore. The company's journey has been defined by its focus on relentless innovation and customer obsession. Founded by Jeff Bezos in 1994 as Cadabra Inc., the company was quickly renamed Amazon.com. In 1995, Amazon.com went live as an online bookstore, and the first book sold was Fluid Concepts and Creative Analogies. The company's DNA was established during this period, prioritizing long-term growth over short-term profits. By 1997, Amazon went public on the Nasdaq, raising $54 million to fuel its ambitious growth plans. Amazon's vision expanded dramatically during this time, moving beyond just books. They introduced two key features: the marketplace in 2000, which allowed third-party sellers to sell on the platform, and Amazon Prime in 2005, which offered unlimited two-day shipping for a flat annual fee. The marketplace created a new revenue stream and massively expanded product selection, while Prime built unparalleled customer loyalty. This period also saw the early stages of Amazon Web Services, or AWS, in 2002, which began as an internal tool and laid the groundwork for what would become Amazon's most profitable division. Amazon leveraged its internal infrastructure to launch two transformative products. In 2006, Amazon Web Services, AWS, was formally launched, offering scalable, on-demand cloud computing that redefined the computing industry. A year later, in 2007, the Amazon Kindle was released, popularizing e-readers and revolutionizing the traditional publishing industry by making it seamless to buy and read digital books. Amazon became a leader in logistics, AI, and retail through key acquisitions and innovations. They acquired Kiva Systems, now Amazon Robotics, in 2012 to automate their supply chain. In 2014, they introduced the Amazon Echo smart speaker and the Alexa voice assistant, creating a new ecosystem for AI. In a bold move, Amazon entered the physical retail space by acquiring Whole Foods Market for $13.7 billion in 2017. By 2015, Amazon's market capitalization surpassed that of Walmart, signaling a major shift from brick-and-mortar to e-commerce. Today, Amazon is the largest online retailer globally. It boasts over 200 million global Prime members and more than 1.5 million employees worldwide. AWS is the king of the cloud, maintaining the largest market share in the multi-billion-dollar cloud computing industry. Amazon's core strategy remains its unwavering obsession with the customer. Amazon's immense scale is built on four main business segments. These segments, often called the four pillars of dominance, work together to create a diversified and resilient empire. Pillar 1. Amazon Web Services, AWS. Though often hidden from the public eye, AWS is Amazon's most profitable division. It provides cloud computing infrastructure to millions of businesses, making it the backbone of the modern internet. AWS disproportionately drives Amazon's operating profit. Pillar 2. Third-party seller services. The Amazon Marketplace is the primary profit engine of Amazon's retail segment. Amazon takes a cut of every sale and charges for services like warehousing, FBA, and advertising. This creates a high-margin business on the back of its retail platform. Pillar 3. Online stores, direct retail. This is the original core of the business, the direct sales of products owned by Amazon. This segment operates on high volume but has thin margins. Its primary purpose is to attract customers to the ecosystem, where they can be monetized through higher margin services. Pillar 4. Subscription Services, Prime. Amazon Prime is the glue that holds the ecosystem together. The recurring high-margin revenue from subscriptions is significant, but its true value is in creating immense customer loyalty. Prime members spend drastically more than non-members. The four pillars are not isolated. They power a self-reinforcing cycle of growth, known as the flywheel. Each component strengthens the next, creating unstoppable momentum that continuously lowers costs and improves the customer experience. The cycle begins with lower prices, leading to a better customer experience, which attracts more customers and, in turn, more third-party sellers. A wider selection then leads to a lower cost structure, allowing Amazon to offer even lower prices, completing the loop. Amazon faces competitors across multiple high-value segments, including e-commerce, cloud computing, and digital advertising. The battle is fought not just on price, but also on innovation, network effects, and sheer scale. AWS's profit margins are significantly higher than those of the retail sector, which highlights why Amazon's long-term strategy relies heavily on cloud market dominance. To sustain its growth, Amazon must overcome significant external and internal challenges, including regulatory oversight, global logistics instability, and increasing labor activism. Recent milestones include antitrust charges in the EU in 2020, the first U.S. unionization of an Amazon warehouse in 2022, and a major FTC lawsuit in 2023. The company also faces ongoing challenges from persistent global supply chain bottlenecks. Total revenue estimated at $575 billion, a 13% year-over-year growth driven by e-commerce and AWS scaling. AWS net sales estimated at $101 billion, accounting for 20% of total operating income. Net income estimated at $30 billion, with a focus on cost efficiencies and improved profitability from inventory optimization. Ad services revenue estimated at $45 billion, a rapidly growing, high-margin business segment. Operating cash flow estimated at $85 billion, representing a strong capital base used for capital expenditures, R&D, and debt reduction. International operating margin estimated at 3.5%, moving from a loss to profitability due to improvements in logistics network efficiency.